Accounting for inventories. Yes, this is our topic. And in this module, we will discuss a problem that we face under this periodic system of accounting. And this problem arises when we have to count our inventory, physical count of the inventory. The thing is that mostly it is experienced that exactly on the closing date at the end of the reporting period, management is not able to undertake this physical count exercise. What happens that the physical count is either done at some time after the end of the reporting period or few days before the end of the reporting period. So these are the two issues that may arise if we are following periodic system of maintaining inventory. Okay, let's see how to deal with this system as an accountant, as an expert accountant that you are now. Okay, so please be with me. There is something new for you, but it's mathematical and would be very much interesting. So we will start with the value of inventory on that date. Okay, how we will tackle this issue. We will start with the value of inventory on that date. What is that date? That date means the date on which we have counted the inventory. Okay, well, so add sales means in a way the date on later date. Okay, like closing date was 31st of December, but we counted this inventory on 5th of January of the next year, supposedly. Okay, well, so we are 5 days late. Okay, so on that later date, sales will be added, means in those, between those two dates, like for example, in between 31st of December X9 and 5th of January Y0, means in between these two dates there are 5 days. So if we have exercised stock count on 5th of January Y0, it means that during those 5 days we have made some sales of goods. Had that inventory count been happened on 31st of December X09, that sales of goods would have been the part of inventory. So that's why now we have to add those sales which happened between the two dates, but we have to work out its cost. Okay. In the same way, we will add purchases return that happened between those two dates. And we will also add inventory that has been lost because of any reason between these 2 days. Okay. Well, and if we have made some purchases between those 2 dates, that would be subtracted. Why? Because we are working out in reverse order now. So had that inventory been counted on 31st December X9, this amount of purchases that we have included in these 5 days, that would not have been the part of that inventory. Okay. Well, and in the same way sales return, but the sales return would be worked out at its cost. So do not think if inventory was purchased before closing date but still in transit, means not yet been received. So these are the areas that we have to focus or work out in order to calculate inventory cost for the closing date. So this was the scenario when the count was happened on later date. What if the count happens on earlier date? Okay, we were thinking that we will be busy on 31st of December X9. So we conducted this inventory count on supposedly 25th of December X9. So 5 days before the date of the end of reporting period. Well, So we will start with the value of inventory on that earlier date. Okay, means 25th of December X9. What we will do? From that date till 31st of December X9, there would have been some sales. We will subtract those sales now from this date inventory. Okay, less purchase return between the two dates, less inventory lost because of any reason between these two dates, and add the amount of inventory purchased between these two dates, and add the sales return at cost between these two dates. It would be more understandable if we work out this exercise. So by doing this exercise, we will have strong grip on this concept. And this exercise tells us that stock taking team could not count inventory on reporting date, that was 31st December X9. Cost of inventory as per the physical count on 5th of January Y0 was 150,000. Following information was provided to you regarding the movement in inventory after the reporting date till the date of physical count. Okay, so between these two dates, means 31st December X9 and 5th January Y0, in between these transactions took place. Now we have to work out to know the cost of inventory on 31st December X9. This is something a requirement. On 5th January, the cost of inventory is 150,000. During these 5 days, we have made a sale, total amount 120,000 rupees, which include profit margin of 20,000, means the cost is 100,000. And the sales return during these 5 days was 12,000. The cost of these goods was 10,000. Cost is given. Well, and purchase of goods totaled 50,000 was made in between these two dates. And purchase return was 5,000. And goods costing 15,000 was lost by theft. Okay, so this is the issue. Now, we will pick up this amount, 150,000, place over here. And cost of goods sold during the period will be added back. Here we go. This is the cost. 120 minus 20 gives cost. Then cost of sales return during the period, 10,000. Here we go. 12,000 was the selling price and 10,000 is the cost of goods given, which have been returned. Well, 10,000 minus. Cost of purchases during the period, during these 5 days, this is the amount that we have purchased. We will subtract. And cost of purchase return will be added. And in the same way, cost of goods lost will be added. By doing this, we will get to know the actual cost of inventory that would have been on 31st of December 2000 X9, and which is 210,000. Okay, so this is all about this issue, that how to resolve this problem. Okay, and I trust that you have confidence now to resolve this type of problem. Just we have to work back. So the ITTRs in this module that work out inventory movement at cost, the important thing. If selling price is given for the sales figure or for the sales return figure, we have to work out its cost first. Okay, and then that cost will be added or subtracted in this working. All right, and the second thing is that NRV is calculated once the cost has been calculated or ascertained. And then we will do the exercise of knowing the NRV of that inventory. All right, so thank you very much for your attentions for this module as well.